Good morning. Another day, another topsy-turvy price action. Bit of mixed signals, to be honest. We've got China was a little weaker with new loans. We're going to have the BOE raising interest rates, but the pound got sold off, and jobs data was a little weaker in the US. And as was PPI, so these two figures here, so that's deflationary, and as is that. Disney got smashed, but I guess the biggest talking point overnight was banks and and tightening credit, which led to a bit of a sell-off in stocks, and we can see the stock market here, that sell-off there. Really happening during the European session mostly, before trying to crawl its way back during the US session. However, the Nasdaq didn't see that price action. Right? Nasdaq dipped a little and then continued to rally. So Nasdaq is still going well, and that's mainly on the back of Alphabet and Amazon. Disney got smashed, and banks got smashed overnight. So we're seeing a little bit of protectionism coming in on the US dollar, as we're seeing, and on the yen as well, but not so much in gold. We're seeing a little bit of upside in the US bonds. That's the 10 years were off, but tried to crawl back, so they're kind of following. This is the yield, right? So the yield's kind of following the stocks at the moment. For the last couple of sessions, and this is the 2 year, which has been just flip-flopping around 4% for some time now. So we're seeing gold off, so that's not protectionism. That's gold tends to go long when inflation is high and interest rates are, or the economy is awakening. It's the safe haven trade, right? Park your money in gold because it's safe in that asset. But that wasn't the case overnight, right? And neither was Bitcoin, which is the quasi gold. Bitcoin also sold off. So a bit odd that the US dollar was so strong, and the yen was strong, but the other safe haven assets weren't. And stocks were a little bit weaker, but managed to sort of come back to finish the day at the sort of middle of the range. So as I said, kind of mixed signals. Aussie dollar faded off 68. We discussed that earlier in the week. Looks like it's in a range now between 68 and 66. The Aussie doesn't like doing ranges, doesn't do it very often, doesn't spend much time in them, but it does love round numbers. As you can see, I've got 68.00, 66.00, and it's sitting right now on 67.00. So it loves round numbers and trading towards them and using them as support and resistance levels. So from here, being on 67, it could track back up to 68, or it could fall to 66. That will depend more on the US dollar. It's being driven by the US dollar rather than direct buying or selling in the Aussie. Euro weaker, and we're expecting that as well. It's come back and tagged the 50 EMA on the daily nicely. Hourly, be more downside there. 4 hour pretty much overdone, maybe a little more downside. So you might see a 108 handle at some stage, but you might not as well. 109. Again, that's going to be where the US dollar goes from here. Right? Pound smashed back down to 25, close to the level that we were looking at getting it, which is the mid 24s. There's not a huge support resistance level here. The one we're looking at is these highs. So we're looking at around there, where you got that top, and it accelerated off that back in May. If we go back, we can see not oh, there's a little bit of support and resistance there. So that's where I'm looking at for it to get to for a potential buy. And it looks like it's tracking that way nicely. And dollar yen all over the shop. Still think this is a buy. The BOJ wants a weaker yen. People are piling back into US dollars after a period of sort of going sideways. It kind of really is still going sideways. If I had to be honest, you look at the 4 hour, it's just up there now. Yeah. So it kind of is still going sideways. It's not until it breaks out of that range that I would say, yeah, we're back into a trend. But right now it's just sideways. And that's Friday. Fun and games. Trade accordingly, be safe, and we'll talk to you next week.